Hello everyone, welcome to Study IQ. In this video, I will bring to you the banking awareness for the month of June. This is set 2 in English. Let's start the video. Let us start with the circulars first for the RBI. So Reserve Bank of India has discussed the evolution and way forward for the central bank statistics in their 18th Statistics Day conference. And the theme of this conference was RBI statistics at 90 because Reserve Bank of India has recently completed 90 years. And National Statistics Day we celebrate because this is the birth anniversary of Prashant Chandra Mahalanobis, who was a great statistician of India. And this day we celebrate on 29th of June. 29th of June. So RBI at 90, RBI statistics at 90 was the theme of the RBI's 18th annual Statistics Day conference. And that's all you need to know, the theme. Now let's come to the Ways and Means Advances scheme of the Reserve Bank of India. So first of all, you should know what is the Ways and Means Advances. Ways and Means Advances scheme of the Reserve Bank of India. See, Ways and Means Advances basically is a loan facility that is given by the RBI to the states as well as the central government and to the union territories. Okay, so usually what they ask is the Ways and Means Advances scheme. When was it introduced? It was introduced in 1997, and this scheme was started so that the states, union territories, etc., they can borrow from the RBI for short term. When I say short term, I mean up to 90 days. They have to return the money within 90 days, and the interest rate is charged at the repo rate. So whatever is the repo rate, whatever is the repo rate that time, that is the interest rate that is charged. So currently, for example, repo rate is 6.5%. So 6.5% will be the interest that the states or union territories will have to pay to the Reserve Bank of India, right? And this scheme was introduced in 1997. Now another thing they can ask is which section of the RBI Act enables the RBI to give the loans to states or union territory or to the central government. So it is section 17(5) of the RBI Act of 1934. Section 17(5) of the RBI Act of 1934 authorizes the central bank to lend to the center and the state governments for 3 months. So this section 17(5) of the RBI Act also you need to know. And by the way, this repo rate, the interest rate that is equal to the repo rate, is only if the states or the central government returns the money within 90 days. If they don't return it, within 90 days, then repo rate plus 2% is charged at the interest as the interest rate. This 2% extra is like a penalty for paying late. And it is not like they can borrow unlimited money under the Ways and Means Advances. So every state or union territory has got some quota. So if I show you here, you can see, for example, Andhra can borrow 2,921 crore whenever it wants from the RBI for up to 90 days at the repo rate. Madhya Pradesh, so the bigger the state, the bigger is the quota, right? So here you can see the big states, they have got a bigger quota. Like UP, you can see that UP has got the highest quota. So what is the amount? What is the amount? Now this amount is decided for half yearly basis, right? And here you can see that 60,118 crore. 60,118 crore. So this is the limit of the Ways and Means Advances, and it will be effective from 1st of July. It will be effective from 1st of July. So all the states of India and union territories of India put together, they can borrow this much money. 60,118 crore from the RBI under the Ways and Means Advances. And you can see here 60,118 crore, the maximum quota is of UP. Is Ways and Means Advances the only facility which is given by the RBI? No, there is one more. In fact, there are two more. So one is called Special Drawing Facility. Special Drawing Facility is also known as Special Ways and Means Advances. So when I say Ways and Means Advances, I mean general, or you can say normal Ways and Means Advances, which I have told you, where interest rate is equal to repo rate. Okay. Now one is Special Ways and Means Advances, also known as, now it is known as Special Drawing Facility. So what is Special Drawing Facility? Here you can see, in Special Drawing Facility, the interest rate that is charged is less. Why? It is repo rate minus 1%. So 6.5 is the repo rate currently, but only 5.5% will be charged. Why is that? Because in special drawing facility, the loan that is given to the states or the union territories by the RBI is against the collateral. So what is the collateral? The government securities. So every state of India, they have share in government securities, right? So the special drawing facility is availed by the state government or the union territories, and it is how much they can borrow. It is linked to the quantum of their investments in the marketable securities which are issued by the government of India. So how much a state can borrow depends on how much it has invested in the government security. So what sort of government securities are there? For example, there is the consolidated sinking fund, there is the guarantee redemption fund, there is the auction treasury bills. All of these are marketable government securities, right? So how much you can borrow? So let's talk about the these two securities or even ATB. Well, you can borrow 50% of the lower of outstanding balance of the funds as on the last date of the second preceding quarter and the current balance which is held in CSF GRF. Okay. And same for auction treasury bill. The maximum limit of SDF shall be 50% of the lower of outstanding balance in auction treasury bill as on the last date of the second preceding quarter or the current ATB balance. 50% of the lower of the two. So this is important, and it looks complicated. It is not, you know. So I told you that special drawing facility, right? Let's say UP government has invested 1000 crore in the government securities. Now how much they can borrow? Well, they can either borrow 50% of this, 50% of 1000 crore, or outstanding balance of the funds as on the last date of the second preceding quarter. And that could be any amount lower of the two. So either 500 crore or this amount, whichever is lower. Okay. Similarly for treasury bill, whatever the states have invested in the treasury bill, they can borrow either 50% of that, or the maximum limit of the SDF shall be 50% of the lower of outstanding balance in auction treasury bill as on the last date of the second preceding quarter, whichever is the lower of the two. So this is the special drawing facility. Now important thing is, in ways and means advances, the interest rate is the same as the repo rate. In special drawing facility, the interest rate that is charged by the RBI to the states will be repo rate minus 1%. Because there is government securities, it is against the government securities. Government securities are like a collateral. So these are much more safer. Now there is one more which is known as overdraft. Now let's say there is a state and it has exhausted its WMA limit. It has also exhausted its special drawing facility limit. Both are exhausted. And if the state still needs money from the RBI, then RBI will give overdraft. That is called overdraft. But in overdraft, the interest rate will be repo rate plus 2%. Repo rate plus 2%. This is the, right? So in fact, under the ways and means advances, if there is a state and it does not return the money within 90 days, then I told you interest rate is repo rate plus 2%, because then it is considered as overdraft. If you don't return it within 90 days, then it is considered as overdraft, and therefore the interest rate is charged as the same of the overdraft, which is repo rate plus 2%. Repo rate plus 2%. And the state governments or the union territories, they can avail the overdraft facility on 14 consecutive days. 14 consecutive days, right? Over and above the 90 days. And then obviously they have to give the money back to the RBI. So I hope you understood. And the overall limit under ways and means advances, this amount 60,118 crore is very, very important. And what was earlier? Earlier the amount was around 47,000. 47,000 crore. 47,010 crore. But it has been increased now from 47,010 crore to 60,118 crore. Now let's talk about HSBC. Reserve Bank of India has put a penalty on Hong Kong and Shanghai Banking Corporation Limited, and this is an order that came on 24th of June. How much is the penalty? 29.6 lakh rupees. Now look, RBI imposes monetary penalty on lot of banks, But this is a special bank. HSBC Bank, you know, it's a very big bank. It is headquartered in London and it is one of the largest global banks. So 29.6 lakh rupees penalty has been put. Why? For non-compliance with certain directions issued by the RBI on credit card, debit card and rupee denominated co-branded prepaid card operations of the banks. So it was not following the proper rules and regulations of the credit card, debit card and rupee denominated co-branded prepaid card operations. And this penalty has been put by the Reserve Bank of India under the provisions of the section 47A1C and section 46(4) of the Banking Regulation Act of 1949. Reserve Bank of India has announced the SAARC currency swap framework for the period 2024 to 2027. Now, SAARC countries, you know, there are 8 SAARC countries. One of them is India. So apart from India, there are 7 more. Total 8 South Asian Association for Regional Cooperation. So these are all South Asian countries. Now, they can borrow money from the RBI. They can borrow it in rupees or they can borrow it in dollar or euro. Now, if you want to borrow it in rupees, then 250 billion rupees, which is 25,000 crore or 250 billion rupees. 1 billion is 100 crore. So 250 billion is 250 into 100, that is 25,000 crore. This much is available. And if you want to borrow the money from RBI in US dollar or euro, then $2 billion is available. And this is available for 3 years, 2024 to 2027. So why is currency swap done? Currency swap is done to protect, you know, our currency from, like, you know, currency swap between the two countries is an agreement that the other country will return the money on a fixed date and at a fixed interest rate. So for the period that a country is taking money, they will pay India interest. If they are taking in rupee or dollar, they will give India interest and then they will pay back the principal amount at a fixed date. So how does this help? So for example, let's say Sri Lanka needs money. They have a foreign exchange crisis. So they can take money in dollar or euro and they can build their foreign exchange reserves. So if any country has a foreign exchange liquidity problems, they can take short-term loan from India from this corpus, which is $2 billion. Or they can also take money from India in rupees and then they can give back in their own currency or any reserve currency at a later date. So currency swap is very common between the countries, and this currency swap facility will be available to all the SAARC member countries. Now let us talk about the most important financial stability report, and it is released by the Reserve Bank of India and it is released every 6 months. So recently the 29th edition of financial stability report was published by the RBI. And who publishes the report? So under RBI, there is something known as Financial Stability and Development Council, FSDC. So there is a subcommittee of FSDC. They release the report. And this report, as the name says, financial stability, it talks about the risks to the Indian financial stability, financial system, and the resilience. How stable are our banks? Can our banks fail? All these things it talks about. So it's a very, very lengthy report, but I will cover it from exam point of view. So this was released at the end of June, and the next one will come on in the last week of December. Well, first let's talk about the risk. So the global economy is facing risk from what? From geopolitical tensions, like we see recently between Iran, Israel. We also see between Israel, Palestine, Hamas, or even in Ukraine, Russia. These are geopolitical tension, elevated public debt, and the slow progress in the last mile of disinflation. So it is becoming very difficult to control the inflation because of the wars and geopolitical tension, the supply chain is getting disrupted. So because of these challenges, the global financial system is facing the risk. But the good thing is that despite these challenges, the global financial system has remained resilient and financial conditions are stable. We have not entered into quote unquote recession, right? So let's take a look at it in much more detail. Now the Indian economy and the Indian financial system remains robust and resilient, anchored by macroeconomic and financial stability. With improved balance sheets, banks and financial institutions are supporting economic activity through sustained credit expansion. India is one of the most financially stable systems despite so many challenges, we are very, very stable. Our financial system is robust and resilient. Now let us back this with some data. Let's talk about capital adequacy ratio. Look, for all the scheduled commercial banks in India, all, when I say all, I mean all the scheduled commercial banks in India, the capital adequacy ratio when the financial year 24 ended, at the end of the financial year 24, it was 16.8%. 16.8%. So this was the capital adequacy ratio. So this shows that our banks are very well capitalized. What is the meaning of 16.8% capital adequacy ratio? Capital adequacy ratio, CRAR, has to be minimum 9%. The more the capital adequacy ratio, the more our banks can absorb the losses, right? So a CRAR of 16.8% means what? It means that for every 100 units of risk, the bank has 16.8 units of capital to cover the potential losses. And out of that 16.8 units, 13.9 is a very high quality capital, which is the best capital, which is called the Common Equity Tier 1 capital, CET1. So the CET1 ratio, Common Equity Tier 1 was 13.9%, and the capital adequacy ratio was 16.8%. Out of that, 13.9 is the CET1 ratio, which shows that the banks, not only they have sufficient capital adequacy, but this capital adequacy is backed by very high quality capital, or the CET1 capital. So let's talk about now the non-performing assets. So the scheduled commercial banks, their gross non-performing asset and net non-performing asset. Let's talk about the gross NPA. Now the gross NPA of scheduled commercial banks, they fell to a multi-year low of 2.8%. 2.8%. And the net NPA is just 0.6% when the financial year 24 ended. It means what? It means that for every 100 rupee of loan that you give, only 2.8 rupee is in trouble. So only 2.8, so 2.8% or 2.8 rupee for every 100 rupee is in trouble. That's it. And net NPA, basically, what is the difference between the two? So in net NPA, we take into account the provisioning also, right? So what does it mean? For every 100 rupee that a bank gives as a loan, after the provisioning, only 0.6 rupee or 0.6% is in trouble. This is the meaning of that. Okay. So these are extremely important figures that you need to know. You have to know that when the financial year 2024 ended, what was our GNPA of all the scheduled commercial bank, what was the net NPA, and what was the capital adequacy. This is absolutely must for you to remember. Now let us talk about stress test. Look, so far the picture is good, but Reserve Bank of India, what it does is it conducts the macro stress test in our economy. What if the stress increases in our economy? So there are three types of stress. One is the baseline stress, one is the medium stress, and one is the severe stress. So what will happen if the stress in the economy increases? What if it becomes very severe? Can our banks fail that time? That is why these tests are done. So the macro stress test for credit risk, they reveal that the scheduled commercial banks will be able to comply with the minimum capital requirements. So if there is a baseline stress, our capital adequacy will still be 16.1% at the end of financial year 25, right? How much is the capital adequacy at the end of financial year 24? 16.8. So from 16.8, we should try to increase it, right? More the capital adequacy, the better the banks are. But if there is a baseline stress, 16.8 will become 16.1. If there is a medium stress, it will become 14.4. If there is a very severe stress, this will become 13%. But even 13% is more than minimum capital adequacy ratio, which is 9%, which shows that even if we consider that there will be a severe stress in our economy, still the banks will be very, very resilient, right? So these are the scenarios which are envisaged by the RBI, and that is why RBI is very, very confident. Very, very confident. Now let's talk about non-banking financial companies. We have talked about the scheduled commercial banks. Non-banking financial company, they are also healthy. See, for a NBFC, the capital adequacy that is desired is minimum 15%. And you can see that all the NBFCs put together, their capital adequacy was 26.6%. 26.6%, right? What about the gross non-performing assets of our NBFC? It is just 4%. It should be less than 6%. So it is 4%. And what about the return on assets? So return on assets, you can see, is 3.3% when the financial year 24 ended. Now, what is return on assets? 3.3%. Return on assets simply means that if you have 100 rupees of assets, how much money are you making from these assets? So they are making 3.3 rupees for every 100 rupees of assets. That is, return on assets is 3.3%. 3.3%. And it should be positive. If return on assets is negative, which means you are losing money. So for example, if your return on assets, let's say, is minus 1.9, it means that for every 100 rupee of your assets, you are losing 1.9 rupees every year. So this is the health of our NBFCs. So you can say that yes, our NBFCs are also very good, and return on assets is positive. Gross NPAs are in control, and a very healthy capital adequacy ratio for our NBFCs. Understood now? Let's move on. Now, let's talk about the financial year 25. What is the projection? See, the projection is that the non-performing assets, okay, the NPA of our banks, how much was the NPA for our banks? NPA, gross NPA. So gross NPA were 2.8% at the end of financial year 24. After 1 year, we expect the NPAs to fall further to 2.5. So great achievement. The NPA will fall further from 2.8 to 2.5. This is the projection, right? So gross NPA of the scheduled commercial banks will go down further to 2.5% by the end of the current financial year, which is financial year 25. Moving on. Now, however, if the macroeconomic environment worsens to a severe stress, the ratio may rise to 3.4%. So you know that the gross NPA is 2.8%, right? What if there is a very high stress in our economy, that is severe stress? Then of course they will not go to 2.5, but rather they will increase to 3.4. They will increase to 3.4%. And individually, if you see the public sector banks, their gross NPA, how much was that in the financial year 24 and 3.7%. So in the severe stress scenario, it will become 4.1. I'm talking of only public sector banks, not the scheduled commercial bank. What about the private sector bank? So in private sector bank, the gross NPA at the end of the March 2024 was 1.8%. It will increase to 2.8%. And for the foreign banks, it will go up from 1.2 to 1.3%. So yes, under severe stress, the gross NPA will increase. But again, even after increasing, they will still be not sizable enough to cause any failure of our banking system. Now let's talk about the net interest margin. So net interest margin has improved from minus 2.5% in 2018 to 3.2% by March 2024. Now, see, this is very important. You should know, definitely you should know what is a net interest margin. Okay. So net interest margin, basically, it shows the difference between the interest income earned and the interest paid by a bank or any financial institution relative to the interest earning assets like cash. For example, let's say there is banks, they earn money. Okay, they earn money how? Through loans. Bank give loans and earn money. And banks, they spend money. Spend money how? They give you interest rate on FD or, CASA accounts, for example, especially saving account. In current account, usually there is no interest rate, but yes, in saving account, there is an interest rate. So these are the expenditures of the bank. Now, net interest margin is calculated how? You take a difference of the money that is earned by the bank. How do you do that? So the earning minus expenses, you divide it by the total assets of the bank and you multiply it by 100. So for example, let's say there is a bank and it has made 10,000 crore by giving loans in 1 year. So this is the earning of the bank, 10,000 crore, right? And you minus the money that the bank has given to the people as interest. So let's say that is 8,000 crore. 8,000 crore is the money that the bank has given as interest rate to the depositors. So how much is the income of the bank? 10,000 minus 8,000, this is the net income. So, okay, 2,000 crore is the net income of the bank. Okay, you divide it by the total money that the bank has, right? So, the bank made 2,000 crore of profit, 2,000 crore of profit on how much? So, let's say the bank had 80,000 crore worth of assets. So, this will be your, you multiply it by 100, this will become your net interest margin. So, net interest margin is your investment returns minus interest expenses divided by your assets. The assets in the denomination, they have to be your interest earning assets. Interest earning assets of the bank. So on 80,000 crore of interest earning assets of the bank made a profit of 2,000 crore. So this comes out to be 1 by 40 into 100 or 2.5%. So 2.5% is our net interest margin. This is how it is calculated. Now the net interest margin, if it is negative, it shows what? If the net interest margin is negative, it shows that the bank has not been able to make good use of its assets, right? So because the money that it has earned is not sizable enough to offset its interest expenses. So bank is losing money, right? If it is positive, then bank is making money, as simple as that. So net interest margin, it was minus 2.5% in 2018, which means our banks were losing money. And this net interest margin, I'm talking about all the scheduled commercial banks of India put together. And now it is plus 3.2%, which means the banks of India, they are now making money. So how much was the net interest margin? 3.2%. And how it is calculated? Very simple. Investment returns minus interest expenses divided by the interest earning assets like cash, for example. This is how and you multiply it by 100. This is how you calculate the net interest margin. What about the return on assets? Return on assets went up from minus 0.2% to 1.3% in the same period. Return on assets. So what is the meaning of return on assets? Return on assets shows that for every 100 rupees of assets of a bank, how much are they making money? Return on assets is positive. So for every 100 rupee of assets that a bank has, it is making 1.3 rupees. Earlier it was losing 0.2 rupees. Now it is making 1.3%. That is called return on assets. So the financial performance of all the banks or NBFCs, it is measured in return on assets and not on return on equity. Now what is the difference between the two? See, return on equity shows what is the money that you are making on your own equity. So let's say I open a bank. Okay, I am Gaurav and I am opening a bank. So 100 crore is the money that I have put in. This is my own equity. And 900 crore is the money that depositors have put in my bank. Okay, yes, this total is asset of the bank, but this is not my money. This 900 crore is the money that can come from CASA deposits, current account, saving account deposit, or FD, term deposits. It can come from that. So what is the total money available? 1000 crore is the total money available for me to make money. Now let's say I make 200 crore of profit. So this 200 crore of profit I have made on 1000 crore. So 200 crore of profit I have made on 1000 crore. So this comes out to be what? This comes out to be 20%. So this is my return on assets. Return on assets, because my total assets were 1000 crore. Okay. My total assets were 1000 crore and I have made a profit of 200 crore. So I have made 20% return on assets. So for every 100 rupee, I am making 20 rupees for every 100 rupee of assets. But my return on equity is not 20% because my equity was how much? 100 crore. So I have made a profit of 200 crore. And what was my equity? Only 100 crore. Assets were 1000 crore, but my was only 100 crore. No, from my pocket, only 100 crore went. So what is my return on equity? It is 200%. 200%, right? So it is always better for the banks to put in less of their own money and take as much as from the people as possible, because in the denominator you will put your own equity, so your return on equity will keep on increasing. So banks are more concerned with return on equity, but the performance of the banks is measured more by the return on assets. Understood now? Because let's take a scenario. Let's take the same scenario. Now let's say I am Gaurav. Now I have put 200 crore from my own pocket. This is my equity. and 800 crore is the money that depositors have put in my bank. So total assets are how much? Again 1000 crore, and I have made a profit of 200 crore from this 1000 crore in 1 year. So calculate my return on assets and return on equity. Return on assets will be the same because in the denominator you have 1000 crore and profit is 200 crore, so it is return on assets is 20%. But return on equity will now be less because I am making a profit of 200 crore and my equity is 200 crore. So my return on equity will be 100%. So this shows that if I am putting in more of my own money, my return on equity will be less. I am only concerned individually, I am only concerned with return on equity. I want more return on equity as much as possible. But what is the problem here? Now let's say, then you will say don't put your money at all, just take money from depositors. But in that case, the bank will be highly vulnerable. Why? Let's take a scenario. I am Gaurav and I am starting a bank. I have not put any money. And I'm saying to the depositor, you give me money. Now, so a lot of depositors have come and they have given me 1000 crore. Now, the problem is that here the bank becomes highly vulnerable because this 1000 crore is the money of the depositors, and these depositors, they can withdraw their money at any time. So my bank can become, I can go for insolvency. I can become insolvent. I will not have money, sufficient money. What if the depositors come and ask for their money in one go? I will not have any money and my bank will be highly vulnerable. That is why RBI says there has to be this capital adequacy and all these things, that is to save the banks. So I was just giving an example of return on assets versus return on equity. Now, what are the challenges? We have talked enough about the financial stability report, but in financial stability report, they talk about a challenge also. What is the challenge? So the first challenge is the CD ratio. And look, you can be asked an essay also on this. So it is a very daunting challenge for the banks to sustain their performance. See, the performance of the banks is improving. There is no doubt about it. The gross NPA, net NPA is down. Capital adequacy has increased. This shows that banks' performance is good. But the problem is that the credit growth is more and the deposit growth is less. To give you one example, the deposit growth, it was only 10.64% till June end, and the credit growth is a massive 13.88%. Now tell me, if the credit growth is high and deposit growth is low, it means what? It means the banks will not have enough money to give to the credit to the people who want a loan, right? So to the customers, the bank will not be able to sustain the money. There will always be customers who will find it difficult to take loan because the credit growth is more and deposit growth is less. So the total outstanding deposits in the banking system is around 211 trillion rupees or 211 lakh crore, while the bank credit stands at 163 lakh crore. Yes, it is covering the credit so far, but there will come a time when the credit demand will exceed the deposits, and that is when there will be problem. So this is called CD ratio. CD ratio means what? The credit to deposit ratio. Now, if I tell you, let's say the CD ratio is 50%, is it good? No, it is not good, because it shows that for every 100 rupee deposit, bank is only giving 50 rupees as loan. So this is very costly for the bank because there is so much deposit lying around. Bank is not making use of it because the bank has to incur a cost. Bank has to give money to the people when they put deposit in the bank. So for every 100 rupee, bank is giving only 50 rupees as a loan. This is not good. 50% is too less. The bank will suffer a lot of cost here. If I say, let's say for a bank, the CD ratio is 95%. Is it good? No, it is also not good, because if 100 rupees coming in a bank, it is giving 95 rupees as a loan, then the bank is again vulnerable, very risky. There has to be money. So there is no guideline by the RBI, but experts say that 65 to 75% CD ratio is good. It should be somewhere between 65 to 75%. Some experts also say it could be between 70 to 75, but you get my point. It should not be too low. It should not be too high. So the CD ratio in the banks is now 77%. 77%. And of course, CD ratio, because the deposits are decreasing by the day. Why? Because the new generation is not depositing money in the bank as FD. They are putting the money in mutual funds, stock market. They want higher returns. The new generation does not believe in putting money in the banks. So the deposit will keep on decreasing. So the CD ratio will keep on increasing. Now to give you one example, the CD ratio has been increasing since September 2021 continuously. It went all the way to 78.8% in December 2023 before it decreased slightly to 76.8% at the end of March. So first thing that you should know, what is the current CD ratio? When I say current, I mean at the end of the financial year 24, it was 76.8%. It is slightly higher. It is slightly higher than the comfort zone, you know. So CD ratio is a big problem. In fact, CD ratio for private sector banks is all the more problem. Why? Because the people, they put the FD, they put their deposits more in the public sector banks because of the trust factor. So for private sector bank, the CD ratio is even higher than for the public sector banks. So this is a big challenge. Now the Reserve Bank of India, the second challenge in the financial stability report is that the Reserve Bank of India is concerned about the buildup of the risk on the liability side, especially in the NBFC sector. Because NBFC sector is more than 1/5 of the banking sector. What is the meaning of this? If all the banks of India put together, they are giving 100 rupees as a loan, then more than 20 rupees they are giving to the NBFC. See, NBFCs, they borrow money from banks only, no? They mostly borrow money from banks. They also borrow money from insurance companies because insurance companies, they have a lot of premium surplus. So insurance companies, they give money to the NBFC. Similarly, housing finance companies, they also take money from banks, from insurance companies, mutual funds, they invest in NBFCs, etc. But biggest source of NBFC is banks. NBFCs take loan from banks. So RBI is concerned that NBFC exposure of the banks is very high, because the problem is that if NBFCs fail, then the banks will also fail. Why? Because let's say if Punjab National Bank is there and 20% of its exposure is in a NBFC, then 2-3 big NBFCs fail, what will happen? Look at the amount of non-performing asset. 20% of the bank's capital will go down the drain, and bank will not be able to survive it. Bank will not be able to survive it. So this is also a challenge that RBI feels that NBFC are getting too much loan from the banks. And we saw that in the last 2-3 years, a lot of big NBFCs have failed. ILNFS, SREI Infra, Dewan Housing Company, all of these have failed. So RBI wanted to be sure that if NBFCs fail, then banks should not fail. So what do they say about that in the financial stability report? Let's see. So according to the RBI's latest financial stability report, you know that NBFCs, they are well capitalized. Their capital adequacy ratio is very good. And NBFCs, they were the largest net borrowers of funds from the financial system. So at the end of the financial year 24, NBFCs, how much money they owe to the banks? 16.58 lakh crore. That's some massive money. 16.58 lakh crore is the money that the NBFCs of India, they owe to the banks. And NBFCs, they take money from whom? Well, bulk of the money they take from the scheduled commercial banks as loan, but they also take money from asset management companies like mutual funds and even insurance companies. If you see the funding mix of the NBFC, funding mix means where do the NBFCs get money from? Then most of it is from the scheduled commercial banks. So how much is that? Well, NBFCs, if you see, the bank's share in the funding mix has increased from 47.5% in December 2018 to now 55.1% at the end of March 2024, which means every 100 rupee loan that NBFCs of India take, they take 55.1 rupees from the bank. So the bank share in the NBFCs loans is 55.1%. Massive, right? So since NBFCs and housing finance companies, they are among the largest borrowers of the funds from the financial system, with a substantial part of funding from the banks, the failure of an NBFC or HFC could have a solvency shock to the banks. And that is the concern of the RBI. But RBI says, I am still not that worried. Why? Now let us assume that there is an NBFC which fails, and this is the NBFC with the maximum capacity to cause solvency losses, which means this is the biggest NBFC of India, or this is the NBFC which has taken the maximum loan. So hypothetical failure of the NBFC with the maximum capacity to cause solvency losses to a bank, then it will knock off 2.29% of the bank's total tier 1 capital, but it would not lead to the failure of any bank. Yes, it will significantly compromise the tier 1 capital of the bank, 2.29%, but still the banks will remain solvent. Similarly, there is any HFC. Let's say the biggest HFC, Housing Finance Company, fail. Housing Finance Company also takes loan from the bank. So the HFC with the maximum capacity to cause solvency losses to the banking system fails. Then it will knock off 3.87% of the tier 1 capital of the bank, but it will not still cause any bank to fail. So even if the biggest NBFCs of India fail, they will still not be enough to make our banks fail. So RBI is still a bit relaxed, but yes, RBI is concerned. RBI is worried. So here I finish the RBI circulars. Now let us come to the MCQs. Recently, World Economic Forum has released the Global Gender Gap Index. This was the 18th edition. As per the report, India has been ranked at which place? India has been ranked at 129th place. 129th place out of 146 countries. Now, which country finished the last? So last was Sudan. Sudan is the last country this time. And which are the countries which performed the best? So before I tell that, look here. Now, gender gap index is made up of 4 sub-indexes: economic participation and opportunity for women, educational attainment of women, health and survival, and political empowerment of women. So you can see Iceland was number 1, Finland was number 2, and Norway was number 3. Norway was number 3. So remember this. And Iceland has been the most gender equal country in the world for a long time now. For a long time now. Now, important thing is that the global gender gap currently, let's say this is male and this is female. Okay. This is the gender gap between the two. So gender gap is 100%. How much have we covered? How much gender gap we have covered? We need to cover 100%. Well, we have covered 68.5%. When we say we, I mean globally. So globally, 68.5% of the gender gap is covered, which means 31.5% still needs to be addressed. It still needs to be addressed. The problem is that at the current rate, it will take 134 years to cover this gender gap to 100%. And that will happen only in 2158. When this happens, I'm pretty sure I won't be alive, and probably neither would all of you. So, but it will take 134 years to reach full parity in 2158, right? Now, let's talk about India. Okay. So India is 129 and last year we were 127. So we have actually dropped by 2 places. In India, how much gender gap we have covered? So let's say this is male and this is female. Okay. This is the gender gap 100%. We have covered 64.1% of the gender gap, but still we need to cover the remaining. We still need to cover 35.9%. 35.9%. And what is the economic situation in India? Well, the economic parity is 39.8%, which means what? It means that a woman in India, if a man is earning 100 rupees, the woman is earning only 39.8 rupees for the same work. This is a very important MCQ. For every 100 rupee that man earns in India, woman earns only approximately 40 rupees, not even 40, 39.8. 39.8, right? And World Economic Forum also gave Travel and Tourism Development Index recently, and Travel and Tourism Development or Competitiveness Index was given. So America was number 1 and Spain was number 2. India was at a respectable 39th position. Brands Most Valuable Global Brands Report. Which of the following company is the world's most valuable brand for 3rd year in a row? It is Apple. Here you can see Apple is the most valuable company in the world. Second is Google and third is Microsoft. So these are the top 3. The answer is Apple and Tim Cook. Tim Cook is the CEO of Apple. By the way, Brands Most Valuable Report is released by Kantar, which is a brand marketing company, and it is headquartered in London. Now, in the top 100, there are 4 Indian brands. There is Tata Consultancy Services, there is HDFC Bank, there is Airtel, and there is Infosys. So which is the most valuable brand in India? It is Tata Consultancy Services. The brand value is $44.79 billion, but globally it is ranked at 46th position. And then HDFC Bank is ranked at 47th position and second in India. Airtel is 73rd position and Infosys is 74th position. So these are the top 4 when it comes to India. Here you can see their rank and their worth. Global Peace Index was released recently. Global Peace Index. So the average level of global peacefulness has deteriorated in 2024. India has been ranked at which position? We are not exactly a very peaceful country if this index is to be believed. So if you talk about our ranking in the Global Peace Index, it is a very, very poor 116th. And this index is given by Institute for Economics and Peace, IEP, which is an institute that is located in Sydney in Australia. Institute for Economics and Peace. They evaluated 163 countries. Now, which is the most peaceful country in the world? Well, it is Iceland. Iceland is number 1, Ireland is number 2, and Austria is at 3rd position. Now, which is the least peaceful country in the world? Least peaceful country is Yemen. Yemen is the least peaceful. It got the last rank. Who has written a book called A Fly on the RBI Wall, an insider's view of the central bank? Very important book because this is about the functioning of the RBI, and it is written by Alpna Killawala. It is written by Alpna Killawala, and Alpna has talked about her experience in RBI in the last 25 years. Also, don't forget another iconic book, Just a Mercenary. This is a book written by Doveri Subbarao, the 22nd governor of the RBI. Which of the following city has topped the recently released Prime Global Cities Index from January to March? Prime Global Cities Index. So you can see that it was topped by Manila, which is the capital of Philippines. Which is the capital of Philippines. And what about India? So in India, you can see Mumbai is 3rd globally and 1st in India. 1st in India. Delhi is 5th globally and 2nd in India. What is the meaning of this? Well, it talks about the best performers in the luxury real estate market. The real estate prices are increasing like crazy. And that also luxury real estate. So in Mumbai, you can see that in the last 12 months, the luxury real estate prices, they have increased by 11.5%. In Delhi, they have increased by 10.5%. In Philippines, they have increased by 26.2%. So Philippines is a very hot place right now if you want to invest in the luxury real estate property. So Manila was number 1, Tokyo was number 2, Mumbai number 3, Perth in Australia number 4, and Delhi in India was number 5. And this index was given by Knight Frank. Knight Frank is a real estate company. It is a real estate company. Jyoti Vij has been appointed as a Director General of which organization? She has been appointed as the Director General of FICCI, Federation of Indian Chambers of Commerce and Industry. And FICCI is an organization which was set up in 1927 by a lot of Indian businessmen like J.D. Birla, Purushottam Thakurdas on the advice of Mahatma Gandhi. It is one of the oldest business organizations in India. It's a non-government and not-for-profit organization. It is based in New Delhi. Who has been elected as the first Vice Chairman of the International Chamber of Commerce? International Chamber of Commerce, the answer is Harshpati Singhania. And International Chamber of Commerce is headquartered in Paris, the capital of France. And who has been elected as the chairman? Philippe Varin. So Philippe Varin is from France and he is the chairman, and vice chairman is an Indian called Harshpati Singhania. Who is Harshpati Singhania? He is the chairman of a company called JK Paper. JK Paper. He is the chairman of this company. Now, International Chamber of Commerce was set up in 1919. It is a more than 100 years old organization, and it's a private business organization. More than 45 million businesses are a part of it. Recently, which of the following organization has mandated insurance companies to offer a policy loan facility across all the life insurance savings products, which means endowment plans, effective from 30th of September 2024 to help the policyholders meet liquidity needs? Of course, it has been done by IRDAI. From 30th of September, you will be able to take a loan against your surrender value of the policy. Right? Now, what is the meaning of that? What is surrender value? Well, let's say you have taken a life insurance savings product. Savings means endowment product. So let's say 25 lakh rupees. This is the sum assured. 25 lakh rupees. You have to pay 10,000 rupees every year. You have to pay 10,000 rupees every year. Just giving you some random numbers. This is the premium that you are paying. 10,000 rupees every year. Now, for the first year, second year and third year and fourth year, you have paid your full premium 10,000. And you have to pay this for 25 years. Okay, and 25 lakh is the sum assured. Now 10,000, 10,000, 10,000, 10,000. When the fifth year starts, you don't have any money left. In fact, your child has become ill, so you need money. So what you can do is you calculate your surrender value. How to calculate surrender value? When calculating surrender value, you take the 30% of all the premiums that you have paid, right? And you minus any surrender charges. So company says that surrender charges are 5,000 rupees. 5,000 rupees. By the way, IRDAI has said that if you pay the premium for 5 years in a row, then surrender charges are 0. But okay, let's say at the start of 5th year, you need money. So how much premium you have paid so far? 40,000, right? But first month premium is not counted. First year premium is not counted. So you minus 10,000. So you have paid 30,000. Then let's say 5,000 are your surrender charges of the policy. So 25,000. You take 30% of that. 30% of that will be 7,500. So this is the surrender value you will get when you surrender your policy. Understood? So you don't need to surrender your policy. Against this 7,500 or the surrender value, you can take a loan. And this is mandatory since 30th of September. So effective from 30th of September, the policy holder, you have taken a life insurance policy to meet the liquidity needs, emergency needs, a loan will have to be provided. Loan will have to be provided against your surrender value. So let us go more into what IRDAI has said. Facility of policy loan is now mandatory in all the life insurance savings products, enabling the policy holders to meet liquidity requirements. If you are a policy holder, if you have taken insurance policy, then now you get a policy loan, which is mandatory. All the non-linked savings products. So on ULIP, it is not mandatory, unit linked insurance plan, but on the non-linked savings products, offering surrender value shall have the facility of policy loan based on the eligible surrender value. The insurer, non-linked means what? In non-linked, the benefits are told to you in advance. In ULIP plans, it depends on how the market is performing. So the interest rate that you get depends on the market, how it is performing. All the non-linked savings products offering surrender value shall have the facility of policy loan based on the eligible surrender value. The insurer may also offer policy loan facility under annuity products with return of purchase price option based on the eligible surrender value. Surrender value, I've already told you, it is the amount the policy holder can withdraw from their life insurance policy at any time. The policy holders will be eligible to loan based on the eligible surrender value. However, on ULIP, it is not mandatory surrender value. It is this policy loan. The loan will not be allowed under ULIP plans, only non-linked products. Now, IRDAI also said something about customer protection. IRDAI said that insurers are required to comply with the award of the insurance ombudsman within 30 days of the receipt of the award. For example, let's say you have taken a policy from LIC and there is some problem with LIC. So you approach the court, but you don't have time for court or the money. So you approach the insurance ombudsman. Now insurance ombudsman finds the fault of the LIC and tells LIC to give you 1 lakh rupees as compensation. Now within 30 days, LIC has to pay me 1 lakh rupees. So the award of the insurance ombudsman, award means their verdict is that 1 lakh rupees has to pay to me by LIC. What if they don't pay me within 30 days? Then they have to pay me a fine 5,000 per day. In case the insurance company does not honor the ombudsman award, a penalty of 5,000 per day shall be payable to the complainant. Understood? The regulator also said, IRDAI also said, the policy holders, they have an option of partial withdrawal under the pension products. If you have taken any pension product from anyone, pension product, what happens? Let's say you are 35 years old, you have taken a pension scheme. So they will start giving you pension once you turn 60 years old. So this is called a pension product. And you pay premium from the age of 35 to the age of 60. This is called deferment period. So deferment period is the period in which you pay the premium, but you don't get the benefit of the pension. So it can be partially withdrawn after 3 years from the date of commencement of the policy during the deferment period. So let's say you have taken a policy in 2015. Okay. Now you are paying the premium. You have started paying the premium. Now 3 years have passed. 2018 has come. Here you are eligible for partial withdrawal. Partial withdrawal. Well, if some emergency arises like marriage of children or medical expenses or critical illness, something, how much you can withdraw. And let's say the maturity date of your policy is 2035. So you have to pay the premium till 2035. So during the entire tenure from 2015 to 2035, you can withdraw 3 times. Partial withdrawal is allowed only 3 times. Okay. The partial withdrawal in a pension product is allowed only 3 times, and in one go you cannot withdraw more than 25% of the total premium paid or as on the date of the partial withdrawal. So from 2015 to 2018, now you want to make a partial withdrawal. In 3 years, whatever is the premium that you have paid, more than 25% of that you cannot withdraw. So in one go, you cannot withdraw more than 25% of the total premium, and maximum you can withdraw 3 times during the entire period. Okay, during the entire period. So partial withdrawal is allowed 3 times during your policy, and maximum 25% of the premium paid till the date of the withdrawal. Which of the following ministry and SBI, they have signed MOU to provide an additional digital payment services of bank through payment gateway called SBI ePay to Indian migrant workers, recruiting agents and other users of the eMigrate portal. Other users of the eMigrate portal. So what is the answer? Well, the answer of this question is Ministry of External Affairs, because eMigrate is a portal of the Ministry of External Affairs. So SBI is providing a payment gateway called SBI ePay to the Indian migrant workers, recruiting agents and other users of the eMigrate portal. And eMigrate portal was launched in 2014. eMigrate portal is used by the Indian workers who are going to other countries, who are emigrating. So emigration checks and all are done on this portal. And if they have to pay any money on the portal, then emigration fees and all those, then SBI ePay can be used. SBI ePay can be used. Which company has announced the signing of a binding agreement for acquisition of Penna Cement Industry at an enterprise value of 10,422 crore? So it's a complete buyout, 100% acquisition. So it is Ambuja Cements. Ambuja Cements is acquiring Penna Cements, which is a company based in Hyderabad. It is one of South India's biggest cement companies. Ambuja will acquire 100% shares of this company, and 10,422 crore. This is the worth. By the way, Penna Cement produces how much cement? 14 million ton per annum. 14 million ton per annum. And currently it is producing 10 million ton per annum, but 4 million ton per annum will be added very, very soon. Very, very soon. Because it is making a 2 million ton per annum plant in Krishnapatnam in Andhra and 2 million ton per annum plant in Jodhpur. So this 4 million ton per annum will be added to their capacity, already 10 million ton per annum. So you can say the capacity will be around 14 million ton per annum. Moving on. Which of the following state has become the first state in India to announce 1 crore in insurance compensation for employees who die in the road accidents? This has been announced recently by the government of Karnataka. By the government of Karnataka, Karnataka State Road Transport Corporation. So if there is any employee like bus driver, bus conductor, or any staff of the transport department, then if they die in road accidents or while being on duty, then their family will get 1 crore compensation. 1 crore compensation. Also, if there is a passenger who dies, then what? Then 10 lakh rupees. If he dies in a government bus, corporation bus, KSRTC, Karnataka State Road Transport Corporation, then 10 lakh rupees. 10 lakh rupees. Passenger dies, then 10 lakh. Staff dies, then 1 crore. Which organization has been awarded Risk Manager of the Year award by Central Banking recently? Central Banking is basically a publication. It's a magazine. It is published in London. So RBI was awarded this prestigious award, Risk Manager of the Year, because despite so many global problems, RBI is still able to hold on its own, right? So Central Banking is a financial publisher. It was founded in 1990 in London. Mercer's 2024 cost of living survey. Which of the following city is India's most expensive city for those who are coming from abroad to work? Expatriates. Expatriates means foreign people who are working in India. So which is the most costliest city they find in India? Globally, which is the most expensive city for the foreign people, for the expatriates? So globally, it is Hong Kong. Those people who have come to work in Hong Kong from abroad, they find it the most costly. Second most costly is the Singapore city, which is the capital of Singapore. Third is Zurich. Hong Kong city is the capital of Hong Kong. And Geneva in Switzerland is the fourth costliest. Basel in Switzerland is the fifth costliest. And Bern, capital of Switzerland, is the sixth costliest. If you talk about India, then Mumbai is the costliest. But Mumbai globally is 136th most costly city. Globally, it is nowhere as costly, but in India, yes. And New Delhi is the second most costliest. It is ranked 165th position globally. So this is the situation of the Indian cities. Which of the following organization is giving a support to Greater Chennai Corporation to achieve sustainable waste management in the city? Sustainable waste management in the city, the answer is World Bank. World Bank will give a loan to the Greater Chennai Corporation for their projects to achieve sustainable waste management. And this project will be over the next 20 years. So they will do a study and then decide how much loan to take. Pension Fund Regulatory and Development Authority, PFRDA, they have selected which company as a system integrator for a period of 6 years. System integrator. So remember, they have recently appointed NEC Corporation India Private Limited as a system integrator. What is system integrator? Well, system integrator is a company which basically runs the subcomponents. It specializes in bringing together different spare parts, different components, different subsystems into a whole and ensuring that all the parts work together. That is called a system integrator company. System integrator company. Now, PFRDA, you know that they are running a project called TARCH project. TARCH. What is TARCH? Technology Architecture. So this is their TARCH project, Technology Architecture project. And under the TARCH project, they are running a platform called TRACE. TRACE. What is TRACE? Tracking, Reporting, Analytics, and Compliance e-platform, or TRACE. I repeat, Tracking, Reporting, Analytics, and Compliance e-platform. It is a part of the technology architecture of PFRDA. So PFRDA TRACE is an important project. It is a comprehensive tool to submit regulatory and supervisory compliance reports. As per the recently released Celebrity Brand Valuation Report, Brands, Businesses and Bollywood, who among the following has claimed the top position in brand value? So you can see Virat Kohli. Virat Kohli, one of the greatest cricket players India has seen. His brand value is the highest, $227 million. Second is Ranveer Singh, the famous actor. Third is Shah Rukh Khan. So this is a ranking which is given by Kroll's. Kroll's is a company based in New York. It is into celebrity brand valuations. International Finance Corporation, which is a part of the World Bank Group, has committed $105 million to part finance a 550 megawatt peak solar power project in which place? This is a solar power project which is coming up in Bikaner in Rajasthan. And this project is developed by a Canadian company called Brookfield Asset Management. And $105 million will be given by IFSC as a loan. Which of the following organization has recently partnered with MasterCard to promote cooperation and information sharing in the area of cybersecurity related to the financial sector? So what is the answer? The answer is CERT-In, Indian Computer Emergency Response Team. They have joined hands with MasterCard to improve the cyber security. CERT-In works under the Ministry of Electronics and IT. And recently, CERT-In also gave a warning about the juice jacking attacks. Juice jacking means what? Juice jacking is where the cyber criminals, they exploit the USB ports to compromise the devices when they are connected for charging. So never charge your device on a public charger, like in airports, etc. The term juice jacking was given by a journalist called Brian Krebs, BRIAN KREBS, in 2011. Which international financial institution is giving India a loan of $170 million to improve our healthcare system? This is a loan given to India by Asian Development Bank, so that we can be more ready for the future pandemics, and it will also improve our disease surveillance system. In 2023, by the way, ADB committed India $2.6 billion of loan, 21,500 crore. 21,500 crore. And recently ADB has also given a loan of $148.5 million to Sikkim for climate proof distribution system of electricity supply. Union Cabinet has approved the viability gap funding scheme for installation and commissioning of 1 gigawatt of offshore wind energy project. In offshore wind energy project, the windmill is placed inside the ocean. This project will be installed in which state? We don't have a single offshore wind energy project in India, and now we are targeting Gujarat and Tamil Nadu. So how much money will be spent? 7,453 crore. This much of the money has been allocated for this scheme. Viability gap funding means you give the funding to make a project commercially viable, commercially sustainable. Now you break down 1 gigawatt into two parts, 500 megawatt each. So 500 megawatt in Gujarat and 500 megawatt in Tamil Nadu. 500 megawatt each in Gujarat and Tamil Nadu. So windmills will be put, and viability gap funding is a very important scheme which has been started. So the nodal ministry will be Ministry of New and Renewable Energy. Ministry of New and Renewable Energy. Also in this scheme, two ports of India, two ports in our country, they have not named the port so far. They will also be supported by the Ministry of Port, Shipping and Waterway to meet the requirements of offshore wind development. And currently in India, let me tell you, Gujarat is leading insofar as the wind energy is concerned. And Ministry of New and Renewable Energy, they also celebrated Global Wind Day on 15th of June. Global Energy Transition Index came recently, given by the World Economic Forum. Index was called Fostering Effective Energy Transition. So India has been ranked at which place in this index? India was ranked a respectable 63rd out of 120 countries. Out of 120 countries. Now which is the number one country? Sweden was number 1, Denmark was number 2, and Finland was number 3. Finland was number 3. And this index talks about the efforts which a country is making to move to the new sources of energy from traditional sources of energy. Who among the following has become the chairman of New India Assurance Company Limited? New India Assurance Company Limited, a woman has become the chairman, and she is Girija Subramaniam. Girija Subramaniam. It is one of the largest general insurance companies of India, and her appointment was effective from 19th of June 2024. New India Assurance Company works under the Ministry of Finance. It is headquartered in Mumbai. Now, Ajit Kumar has become the Managing Director and CEO of Dhanlakshmi Bank, and Akhil Gupta has become the Chairman of Bharti AXA Life Insurance Company. HDFC Ergo, they have appointed Anuj Tyagi as their Managing Director and CEO, and Naveen Chandra Jha has become the Managing Director and CEO of SBI General Insurance Company Limited. Apex Company, it's a technology company. Apex has partnered with which organization for conducting a hackathon called Harbinger? It has partnered with Reserve Bank of India. But you do need to know the name of the company, Apex. Apex is a global fintech company. It is a collaborative innovation platform, Apex, and RBI conducted its hackathon on the Apex platform. Apex platform is used by the fintech companies and the innovation companies. And you know, there were two themes of Harbinger: zero financial frauds and being Divyang friendly. Being Divyang friendly, the winners get 40 lakh rupees. 40 lakh rupees. Recently, board of which of the following organization has fully approved the final structure of African Vaccine Manufacturing Accelerator? Now, this is a new organization that has been created by whom? So this is an organization that has been created by the Vaccine Alliance, or Gavi. Gavi, the Vaccine Alliance. And this African Vaccine Manufacturing Accelerator, it was launched on 20th of June 2024. So this is basically a financing mechanism that wants to create a sustainable vaccine manufacturing industry in Africa. Africa wants to be self-reliant in vaccine manufacturing. And you know that Gavi is an international organization. It was created in the year 2000. It's a global vaccine alliance supported by many big organizations like WHO, UNICEF, World Bank, Bill and Melinda Gates Foundation. So Gavi is headquartered in Geneva, and it makes sure that even the most poor countries of the world receive vaccines. Global Gas Flaring Tracker Report has been released by which organization? It has been released by World Bank. It shows that the global gas flaring volumes have increased by 7% to 148 billion cubic meter in 2023 if you compare it with 2022. What is gas flaring? When you extract the oil and gas, there is a lot of natural gas that gets burnt, and therefore it goes to waste. Therefore it goes to waste. So that is called gas flaring. Statistical report came recently on the value of output from agriculture and allied sectors. Allied sectors like cattle, dairy, fisheries, all of these are allied sector, agroforestry. So agriculture and allied sector, they have accounted for what percentage of the GVA in the financial year 23? What was the contribution to the agriculture and allied activity? It was 18.2%. Which of the following company has joined the World Bank's Water Resource Group's low methane rice project under UP Pragati Accelerator program to promote direct seeded rice in UP? Direct seeding of rice saves a lot of water. It also controls weeds. So the answer is Kisan Craft Limited. There is a World Resource Group of the World Bank. They have a project called Low Methane Rice Project. And this is a project UP Pragati, which is supported by, in UP, Uttar Pradesh, it is supported by the WRG, Water Resource Group, and Bill and Melinda Gates Foundation. Bill and Melinda Gates Foundation. Which district administration has initiated a monthly pension of 1,000 rupees for those individuals who are suffering from sickle cell anemia under the Swami Vivekanand Nishakt Swavalamban Protsahan Yojana? This is a scheme of the government of Jharkhand, and the answer is Khunti. Khunti, Jharkhand's Khunti district. Basically, Swami Vivekanand Nishakt Swavalamban Protsahan scheme is a brainchild of DC of Khunti, Lokesh Mishra. And this is basically a scheme to provide social security to the differently abled people through direct benefit transfer. Which bank has received national award from PFRDA for maximum enrollment in Atal Pension Yojana? Which bank am I talking about? It is the Karnataka Vikas Gramin Bank that is headquartered in Dharwad, and it is sponsored by the Canara Bank. So maximum enrollment happened in Atal Pension Yojana. Now during the financial year 24, Karnataka Vikas Gramin Bank enrolled 86,350 accounts. And Atal Pension Yojana was launched in 2015 by the Ministry of Finance. It is controlled by or implemented by PFRDA. You need to be between the age of 18 to 40 for registering for the scheme, and it gives you a minimum guaranteed pension of 1,000 and maximum guaranteed pension of 5,000 per month from age of 60 years onwards. Which ministry and World Bank, they have conducted a 2-day simulation exercise in Madhya Pradesh to enhance the preparedness for potential avian influenza, also known as bird flu. This is the Ministry of Animal Husbandry, Fisheries and Dairy. So this was conducted preparedness exercise in Bhopal recently. Ask Private Wealth Hurun India Future Unicorn Index, which of the following company has skipped Ghazal stage and directly entered into Unicorn Club? So there are 3 types of company. Cheetah, if the valuation of the company is between $250 to $500 million, it is called a cheetah. It is called a gazelle if the value of the company is between $500 million to $1 billion and more than $1 billion, then it is called a unicorn. So which is that company? This is Porter. Now directly it was a cheetah, so directly it became a unicorn, right? Porter is a logistics company. It is a logistics company, and this index says that there are 152 companies in India which are future unicorns, which mean they may become unicorns in the future, right? And this report also said that India currently has 67 companies which are unicorn, 46 companies which are gazelle, and 106 companies which are in the cheetah category. Understood that? And recently Zepto company also became unicorn. There is a company Perfios that also became unicorn, and Krutrim SI also became a unicorn. Zepto became last year. And these you can see are the top 5 Indian cities in the unicorn index. Bangalore is by far number 1. And the maximum number of unicorns are in the fintech sector. BharatPe has collaborated with which organization to promote digital financial inclusion and digital financial literacy across one district, one product, producers and sellers across ODOP districts in India? So BharatPe has recently collaborated with a company. This is called Invest India, and they will promote digital financial inclusion and digital financial literacy. They will especially work in tier 3 and tier 4 cities and rural areas of India. One district, one product scheme is basically every district is attached with one product and it is made popular. So this program will impart knowledge on digital payment, but also on cyber security, etc. ODOP is run by the DPIIT, Ministry of Commerce. Ministry of Commerce. Invest India is an organization which was set up in 2009. It's a non-for-profit organization. It also works under Ministry of Commerce. Indian government has monetized the assets worth how much under the National Monetization Pipeline in the financial year 24? So Indian government monetized 1.56 lakh crore worth of assets under the National Monetization Pipeline. And their target was 1.8 lakh crore, but they were able to achieve 1.56 lakh crore. Now, this scheme, National Monetization Pipeline, was started from financial year 22 all the way till financial year 25 for these 4 years. In financial year 22 and financial year 23, these 2 years, right? 2.3 lakh crore was monetized in financial year 22 plus financial year 23. In financial year 24, 1.56 lakh crore. And which ministry monetized maximum assets? Coal Ministry. Coal Ministry, 56,794 crore. And second was the Ministry of Road Transport and Highway, 40,314 crore. And 14 crore. Which of the following company has launched an app, UPI app, Super Money? Super Money is an app launched by Flipkart to give their customers more solutions for digital payments. Which company has been accorded Mini Ratna status category 1? Mini Ratna category 1 means the company is profitable for the last 3 years and in one of the year, the profit is minimum 30 crore. That is called a Mini Ratna category 1 and later on it can become Navratna and then Mini Ratna. It is Central Electronics Limited. Recently, this company is celebrating its Golden Jubilee 50 years on 26th of June. It celebrated its 50 years. It's a company based in New Delhi. It was set up in 1974. And this is a company that works under the Ministry of Science and Technology. Ministry of Science and Technology. Also, Grid Controller of India Limited company also became recently a Mini Ratna category 1 company. CAG of India has inaugurated India's first Navigating Audit Heritage Museum at the Chadwick House. Where is it? It is in Shimla in Himachal. It's a very iconic place. Even Mahatma Gandhi visited this place in 1946 during the cabinet mission. And after independence in 1947, 3 years later in 1950, it became a training school for the Indian Audit and Account Service. So Navigating Audit Heritage Museum. Navigating Audit Heritage Museum will showcase the glorious auditing heritage of India. And recently CAG of India has partnered with Nepal and Bulgaria for mutual collaboration. Migration and Development Brief Report is given by which organization? It is given by the World Bank. And look here. It shows that India received maximum remittance in 2023, $120 billion. It will increase to $124 billion in 2024 and further $129 billion in 2025. So India will continue to receive maximum remittance in the world. However, the growth of remittance will decrease. We had a growth of 7.5% in the financial year 23, but we will have a growth of just 3.7% in 2024. Migration and Development Brief. So this is a report by the World Bank. Now after India, Mexico, $66 billion, second highest remittance. China was third, $50 billion. Fourth was Philippines, $39 billion. And fifth was Pakistan, $27 billion. Prime Minister of India has launched JKCIP project, Competitiveness Improvement in Agriculture and Allied Sectors. This project is a partnership between Government of Jammu Kashmir and which organization? JKCIP. So this is a collaboration between the Government of Jammu Kashmir and International Fund for Agriculture Development. This is a project worth 1800 crore rupees. This project will be executed in 20 districts of Jammu Kashmir. It will benefit 15 lakh beneficiaries and 3 lakh households. 3 lakh households and 15 lakh will be beneficiaries. 15 lakh people will benefited. So what is the budget for the project? Budget for the project is $217.2 million. Out of this, International Fund for Agriculture Development is contributing $100 million. And Government of Jammu Kashmir is contributing $26.4 million. The private banks will contribute $20.8 million, like that. India's external debt has increased by $39.7 billion from financial year 23 end to financial year 24 end. So what is our external debt as of now? India's external debt is $663.8 billion. External debt is basically the money borrowed from a source outside the country, which needs to be repaid in the borrowed currency. That is called external debt. That is called external debt. Now, what was the external debt to GDP ratio of India? 18.7%. 18.7%. Right? 18.7%. Now, most of India's external debt is in dollars. It is in US dollar, 53.8%. Second is Indian rupees, which is 31.5%, and third highest is in yen, 5.8%. 5.8%, right? Now, if you break it down, then maximum debt is loans. 33.4% of our debt is loan. Second is currency and deposits. 23.3% is currency and deposits. Which company has been given Navratna status by the Department of Public Enterprise, which works under the Ministry of Finance? Which company? So this company is Mazagodok Shipbuilder. It has completed 250 glorious years and it got the Navratna status. Navratna status. Now, since it is a Navratna company, it can invest 30% of its net worth or 1000 crore, whichever is less, without the approval of the central government. And this company has completed 250 years. This company started way back in 1774. 1774, and it works under the Ministry of Defense. Security and Exchange Board of India has introduced a framework for financial disincentives for surveillance related lapses for market infrastructure institutions. As per the framework, if the annual turnover of market infrastructure institution is less than rupees 1000 crore, penalty for first instance will be how much? Penalty for first instance will be 25 lakh rupees. If there is a company which is making lapses in surveillance, the penalty will be 25 lakh if it's less than 1000 crore company. And this framework will be applicable from 1st of July 2024. 1st July 2024. So first instance 25 lakh, second instance will be 50 lakh, and third instance will be 1 crore. 1 crore, right? So that is if the annual turnover of the market infrastructure institution is less than 1000 crore. 1000 crore. Now, what if the annual turnover is between 300 to 1000 crore? Then what? Then the penalty will be 5 lakh, 10 lakh and 20 lakh on first instance, second and third instance. What if the annual turnover is less than 300 crore? Then penalty will be 1 lakh, 2 lakh and 4 lakh. First instance, second instance and third instance respectively. So this is the framework. As per a report by State Bank of India, India has formalized what percent of its economy between financial year 16 and financial year 12, as the share of the informal economy fell to 23.7% from 25.9% during the 7-year period. So according to the SBI report, India has formalized $26 trillion worth of its economy in these 7 years. And what is the informal economy in India? Informal economy in India at the end of the financial year 23 is 23.7%. 23.7%. So this is a big statement from SBI. Moving on now. State Bank of India has distributed a dividend of 6,959 crore to the Indian government for the financial year 24, and SBI reported a profit of 67,085 crore for the financial year 24. Which bank has launched Smart Lock? It is a safety feature on its app called iMobile. iMobile, this is ICICI Bank. This feature allows the customers to unlock multiple banking services instantly without the support of the customer care executive through a phone or an email. As per the information shared by RBI, India's current account deficit has reduced to what percent of GDP in the financial year 24? It was 2% of GDP in the financial year 23, and it has reduced to 0.7% of the GDP. India's current account deficit. Current account deficit essentially is basically the difference between the import and the exports. That is the current account deficit. It is 0.7% of the GDP, and this is a very important question. Current account deficit means the measurement of the country's trade where the value of the goods and services it imports is more than the value of products it exports. And SEBI has made a committee to review the derivative trading norms. Who will be the head? Head will be G. Padmanabhan. G. Padmanabhan. It will look into different trading like futures and options trading. Market cap of which company has crossed $100 billion mark, and it has become only the 6th Indian company to do so. It is ICICI Bank. ICICI Bank. Before that, Reliance, TCS, Tata Consultancy Service, HDFC Bank, Bharti Airtel and Infosys. These are the 5 which achieved this milestone. RBI has raised Ways and Means advance limit, for state government and union territories from 47,010 crore to what? So I have told you already, it is 60,118 crore. We have already discussed this in the circular. Which company has introduced Bridge the Gap campaign to educate the public about the role of life insurance? It is HDFC Life Insurance Company, and we want insurance for all by 2047. 2047. HDFC Life has partnered with ET Now, Economic Times Now. It's an English language business and finance news channel in India for this. HDFC Bank Limited has launched at HDFC Bank Smart Wealth. It's a new digital investment platform designed to make wealth services accessible to every Indian. Insignion is a company of New York, American company. It has partnered with Royal Sundaram General Insurance Company, right? And which is a Chennai company, and IRCTC, Indian Railways Catering and Tourism Corporation, to revolutionize the travel insurance sector. Punjab and Sindh Bank has signed an MOU with the Indian Army. They are offering defense salary package with a host of facilities including free insurance cover. So there is a special account. PSB means Punjab Sindh Bank Gaurav Bachat SB salary account, and it will give you a lot of benefits if you are a defense personnel. So for example, accident insurance or death or disability cover up to 1 crore and air accidental cover of 1.2 crore. That was a video banking awareness for the month of June in English. This was set 2. I'll see you in July set 1. Thank you for watching Study IQ.